Hi grade 12. So in this video we are going to do a balance sheet or a statement of financial position. So this is the question paper that was written on March 2022. Okay, so it was a question 2. All right, so before we go to the balance sheet, we are going to prepare a retaining income note. Then after that we're going to prepare our balance sheet. So in order for us to not waste the time, I drafted out a format that we are going to use. Okay, let's go straight to the question. Number one, they said required 2.1.1 a retaining income note on 28 February 2022, 16 marks. Okay, and after that we have to complete a statement of financial position on 28 February 2022, 30 marks. That's a lot of marks because in total it's going to give you 46 marks. All right, now let's check our information. We have information, then a list of balance before taking into account all adjustment below. Okay, number one, ordinary share capital, we don't have a balance. Number two, retained income on 25 February 2022. If you check, they said 25, they didn't say 28, which means that we can assume that this is the opening balance. We must first do what? Some calculation and do some adjustment. All right, we're gonna see it on the information if we have any adjustment. Okay, it's 2,300,000. all right, now let's check if we have any information. So information number F is the one that is going to affect our opening balance. Okay, let's read the share and dividend. The company paid interim dividends of 800,000 on 1 September 2021, and final dividends of 70 cents per share was declared on 28 February 2022. Okay, then we have a 30,000 share were repurchased on 25 February 2022 at 5 rand above the average share price of 15 rand, and they said this was recorded. All right, so which means that this transaction of share buyback, it was already recorded, which means that what we need to do, because we have this part where we have to subtract it, we must first add it back, because we're still going to subtract it. Because if we come here and subtract it, which means that we're going to do what? A double entry, or we're going to do a duplication of amount. Okay, how much are we going to add back? They said they repurchased a 30,000 share, which the loss, it was 5 rand. If they said the amount above, which means that that amount, it was exceeded what? The normal price, the average price, which means that the loss was 5 rand. Remember, under retained income, we don't record average price. Average price, we record it under what? Ordinary share capital notes. In this case, we only record what? The loss that we made when we repurchase what? Our share. Okay, for example, let's say the normal price of share, like in this case, is 15 rand. The normal price is 15 rand, and we purchased them back by 20 rand, which means that we make a loss of 5 rand. That's what they're saying. Okay, which means that this loss of 5 rand is the one that we have to use to multiply at 30,000. So if you say 5 multiplied by 30,000, because I don't have a space for calculation, 5 multiplied by 30,000 is going to give you 150 that you are going to add back. 150,000. All right, then after that it's gonna give you an amount of opening balance of 2,450,000. So the reason of doing this is because they said this transaction has been recorded and we still have to subtract it here. All right, which means that the same calculation is going to apply here. 30,000, I'm going to show that calculation now. Multiply by 5, which is going to be minus 150,000. Okay, now let's go back to net profit after tax. I was doing this one because I already explained it. Okay, now we are subtracting it again. Okay, net profit after tax. Okay, if you check on our table, they only give us SARS income tax. We don't have any income statement here that we can identify net profit after tax. Okay, they give us a provisional tax of 510 and the transaction number E. Income tax rate is 28% of the net profit before tax, and it was determined that an additional of 190, it was still owed to SARS, which means that it was liability. Okay, which means that from amount of 510, we have to add amount of 190 so that we can see how much tax we're supposed to pay. Okay, if you add 510 plus 190 is going to give you 700,000 if not mistaken, because 510 plus 90 is 600 plus 100 is going to be 700. Okay, 700,000. This is not the answer. Remember, they are looking for net profit after tax, and we only have what? Income tax according to income statement, which means that because we know the percentage of 28%, we can get what? Net profit after tax is 72%, because 100 minus 28% is 72. We're gonna say 72 over what we have. What we have is tax of 28%, which means that we're gonna say divide by 28%. Then it's gonna give us a net profit after tax of 1.8 million. Very simple. 1.8 million. Very simple, but as long as you know all the tricks that they can test you. So there is a lot of tricks when it comes to grade 12. So please make sure that you watch even the other videos so that you can learn and gain more principle. Okay, let's proceed. Now let's go to dividends part. Dividends part, they said the company paid number F. The company paid an interim dividends of 800,000. Interim is 800,000. And they said the final dividends of 70 cents per share was declared on 28 February. So remember, they said 200,000 shares were in issue on 28 February, but there was a repurchase of share of 30,000. So now the question is, are those 30,000 going to form part of final dividends of 70 cents? Let's check the date now. If you check, they repurchased on 28 February 2022, and our year was ending 28, which means that it's 3 days before. My question is, do you think if the month is ending tomorrow, like in this case, or the following day, the following tomorrow, do you think your employer is not going to pay you a salary? Remember, you work from the first of the month until 27. Do you think the employer is going to pay you? Obviously, yes, they're going to pay you, which means that even these shareholders of 80,000, they are still going to do what? To earn that 70 cents, which means that when we add them with 2,000, it's going to be 2,030,000. We have to include them from the balance that they give us after what? After repurchase. Okay, then it's gonna give us an amount of 1,421,200. So if you add this together, they are going to give you a dividend of 2,221,000. Simple. And if you do this calculation, you add these two and you subtract these two, it's gonna give you the balance of 1,879,000. Very simple, very simple. So this is how you should complete your retained income. So I hope now you are still enjoying watching this video, guys, but please just support me by subscribing to this channel. To subscribe, guys, it's free of charge. You're not going to pay anything. You can also, guys, support us by buying a study guide for grade 12 accounting that is going to give you a lot of solutions, a lot of question papers and memorandums that you are going to use to practice. So just contact us on WhatsApp so that you can get your soft copy by only 49 rand. Okay, now let's proceed to our balance sheet. So when we go to balance sheet, guys, because we already prepared retained income notes, we already have a balance for this one. We just copy it so that you can in even a chocolate mark if it's not correct. Okay, now let's proceed. Now let's check, where do we start? Ordinary share capital, they didn't give us a balance. Okay, now let's take another one. Let's take a fixed deposit. The second one, a fixed deposit, because fixed assets there is no balance. A fixed deposit, they give us amount of 400,000, and there is no any transaction related to that, which means that it's not matured and they didn't increase anything. Okay, 400,000. But if it matured, we're going to subtract it and put it into the bank. Okay, and another one, we have a trading stock. Okay, a trading stock, we have a adjustment that we need to adjust. So we're gonna put 780 under a bracket and check the transaction. So transaction number 2. On 28 February 2022, Fragile Ltd returned 20,000 air conditioner to supplier, which was purchased on credit. Okay, cooler wholesaler. The selling price was 12,000 each and the markup was 50% on cost. So a customer has returned. Okay, a customer has returned. So which means that remember, when you are using a perpetual inventory system, whenever we sell a good, we must record what? A cost of sales as well. Okay, and the cost of sales affect what? Inventory. Okay, which means that those inventory that has been returned, we have to add it back because we subtract it when we sold that goods. Okay, now how are we going to do that? Okay, let's do this calculation. They said it's 20 air condition. It's 20 air condition, and we have to multiply each by 12,000. Okay, then after that you're gonna get an answer, which is a selling price, and a selling price, then now we can multiply by what? Markup, so that it can give us a cost price, because we have to record it as a what? As a cost price. A markup is 50, which means that it's gonna be out of 150. So 100 is come on top if you are calculating a cost, then 150 come on the bottom if you are given what? A selling price. Okay, then if you do this calculation, you are going to get amount of 160. All right, so let's read this transaction again, guys. On 28 February 2022, Fragile Ltd returned. Fragile is us, which means that we are the one who did what? Who returned. It's not a customer. So if it's us who return, which means that we take it from our store and return it to supplier, which means that we have to subtract once against that we got. Okay, apology about the first explanation. I thought maybe it's the client. If the client return to us, we add. If it's us return to supplier, we subtract. Very simple. Okay, and if you minus, you are going to get an amount of 620, because there's no any other transaction that is going to affect inventory. Okay, now let's proceed. A trade receivable. Okay, a trade receivable, we have the first balance of 820,000. Now we have to check another one that is going to affect trade receivable. Number one, what about income receivable? And we also have expense payable. So which one is it going to fall under an asset and why? So income receivable simple means that there is someone that we're expecting that we're going to do what? To receive, which means that we don't owe anyone. Someone owe us. Okay, it's like accrued income. So we have to add it. Is 25,000 plus 25,000. So the other one, expense payable, is accrued expense. We are owing someone, which means that it's liability. It's not assets. Okay. Then the other one is gonna be transaction number 1. A debtor with a credit balance totaling 25,000 must be transferred to the creditor's ledger. This one is very simple because it's a credit balance. We have to add it under assets and also add it under what? Liability. Okay, it's gonna be plus 15,000. But if it was a debit balance, we're going to subtract on the bottom as well. So remember this one, we're still going to adjust it under what? Trade and other payables. Okay, let's proceed. I think for this one we can now totalize. If we totalize this one, it's going to give us 860,000. Okay, then let's proceed. We also have cash and cash equivalent. In this case, we only have a bank. So a bank is an amount of 2,438,100. Okay, simple like that. Okay, then after that, I think we're gonna only left with this part. Okay, we're gonna left with this part to calculate, but we are not able to calculate it yet in this case. So, which means that we have to proceed until we've done everything. Okay, apology. Okay, now we are going to equity and liability. Okay, under equity and liability, we already started with this one. Now we left with share capital and the remaining. Okay, let's start with let's start with a loan. We have a loan balance from Zulu Bank, which is 900. It's non-current liability, this one, 900,000, and check the transaction. Okay, then we have transaction number D. Okay, transaction number D, they said a fixed monthly installment of 40,000 to cover loan repayment and interest has to be paid over full period of the loan. Interest will decline over life of the loan, and repayment for current year has been paid and recorded. The interest on the loan budget for the next financial year is 208. Okay, they give us a loan repayment of 40,000, but now the problem that we have is that we don't record a monthly items under balance sheet. We have to multiply it by 12 so that it can give us annual. So 40,000 multiplied by 12 is going to give us a 408. Okay, we need to do this calculation. 408. Okay, we can just write it here. Minus 480,000. Remember, 480,000, we get it by saying 40,000 multiplied by 12 months so that it can give us annual balance. Okay, now remember they said that there is an amount of 280 of interest which was budgeted for next financial year. Okay, which means that 280. Okay, let's do it in this way. the answer that we got of 480, we have to subtract what? 280,000 for next financial year, so that it can give us the answer that we can just go and subtract it here. So if you minus this 2, is going to give you 200,000. 200,000. Then we're left with 700,000. Now I want to explain to you so that you will understand, because the most important part is for you to understand. Okay, what does this 200,000 mean? If you check, they said 40,000 include what? Repayment and what? Interest. And 280 is for what? Is for only interest. And they said the interest of loan budgeted for the next financial year is 280. So simple means that this is going to form current portion of a loan. When we talk about a current portion of a loan, this simple means that this is the amount that we are going to pay within 12 months. Remember, non-current assets is assets. Okay, non-current liability, non-current liability is liability that we are going to pay after 12 months. It's a long term. That's why we put only loan, because it's for long term. This one is for short term. It's for less than 12 months. So the one that is going to be paid within 12 months, that they said in the next financial year, obviously is within 12 months, which means that we have to subtract it under loan and put it into what? Into current portion of a loan, because this 200,000 is current portion of a loan, and it's no longer a long term, but a short term, because it's going to be paid within 12 months. Simple. We remove it under long term and put it under short term, because it's going to be paid within 12 months. Okay, now let's proceed. Okay, then the other one that we can go to, I think is we can go to ordinary share capital. Ordinary share capital, if you remember, I don't think we have it. So we're gonna go to number G. Number G, the following financial indicator was calculated on 28 February 2022. Net asset value per share. If you know the formula of net asset value per share, it says net assets divided by number of share. Net assets is the same as assets, total assets minus total liability is equal to equity, which means that net assets is the same as equity, which means that the total equity, we can get it. So how are we going to get it? Very simple. Do we have number of share? Yes. Number of share is 2,030,000. Remember, we have to include those one that they repurchase, because they repurchase at the end of the year. Okay, it's 2,030,000. Do we have net assets? No, it's the one that we are looking for, because it's the same as equity. But we have an answer, because they say the net assets is 620 cent. 620 cent is the same as 6 rand 20. We have to multiply by 6 rand 20 so that it can give us net assets. If you do this calculation, it's gonna give you a net assets or equity of amount of 12 million. Okay, it's 12 million and 58,000. Okay, 58 and 8,000 and 6,000. So it's 12 million and 58,000. All right, now because we get our net assets or total equity, simple means that we can be able to get share capital, because we are just going to say this 2 is equal with this one, which means that we can just say this one minus this one is going to give us this one. Okay, we do the balancing figure and we're going to get a ordinary share capital of 10 million and 707,000. Okay, I think I left 1 0 here and 7,000. Yeah, just like that. Okay. Okay, yeah. This one is 12,586,000. Yeah. Okay, now let's proceed. We are done with equity part. We have to complete this one so that we can get this one. Okay, now let's check another one. So I think we have to go to trade and other payable. Remember, under trade and other payable, the first one is 820. Okay, it's not 820, it's 666,000. 666,000. Okay, and after that we have expense payable, which we have to add of 16,000, and we also have 15,000, guys, that we transfer from debtors. It's 15,000. All right. Then after that, we have to check an amount of, okay, remember we return a good. Do you still remember the goods that we return to supplier, which means that we no longer owe them, those people? We have to subtract that 160. We no longer owe them. We have to subtract it, 160,000, and we remove it under liability. We don't owe them, we return those goods. So if you do this, it's gonna give you the total of 537,000. Okay, just like that. Then let's check another one. Another one, remember transaction number E. They say it was determined that additional 190 is still owed to SARS. We have 190 liability, SARS income tax of 190. We owe SARS. If it was due to us, it was going to be recorded under assets. Very simple. Okay. And another one, shareholder for dividends. We calculate it here. Shareholder for dividends is 1 million. It's 1,421,200. Okay, so I think we are done with that part. Let me check, because if you do one mistake under balance sheet, guys, they are not going to balance. So I must verify as well. Okay, I think transaction number B we did, C we did, D we did, F we did, and E and G. Okay, yeah, I think we recorded everything that was needed. Okay, then under total equity and liability is gonna give us 15,634,000, which means that this balance, total equity and liability, must be the same as total assets, 15,634,000. Okay, now because we have total here, we have total. Simple means that, guys, in order for us to get this amount, we must take this total and subtract everything. Then it's gonna give us an amount of where is it? It must give you amount of 11,315,900. Then total assets, total non-current assets, I mean, it's gonna give you 11,715,900. So this is how you should complete a balance sheet. So please make sure that you also watch income statement that I did, and as well as other balance sheet that I covered, because guys, balance sheet for grade 12, they have a lot of trick, and they will never ever give you the balance sheet that you can be able to identify whether it has balance or not, because one item they are going to require you to calculate it as a what? As a balancing figure. So you have to be careful about that and make sure that you make it balanced so that you can get a chocolate mark for this one, even if you did one mistake. So I hope you enjoy and you like, you have subscribed to this channel. See you guys.